Good morning! Today is Wednesday, September 7th, and these are your data highlights. Shares of Digital World Acquisition fell by 11% yesterday, following reports that the company failed to garner sufficient shareholder support to authorize an extension that would give the SPAC more time to close the proposed merger with Trump Media and Technology, which operates the former US president's Truth Social network. Digital World needs 65% of its shareholders to vote in favor of the extension, but the SPAC's investor base includes a high proportion of retail investors, and retail investors generally do not vote as often as institutional investors. This challenge is not unique to Digital World, as other SPACs have grappled with similar issues in getting the retail investors to vote. In response, Digital World adjourned its special meeting until September the 8th, which will give it more time to garner the shareholder support it needs. The SPAC now faces the risk that it may be forced to liquidate itself and return the funds in its trust account to investors. Short interest remains high at 4 million shares, or 13% of free float. Video game retailer GameStop will report fiscal second quarter earnings after the close. GameStop has not provided financial guidance since the beginning of the pandemic, nor does it take questions from analysts. Wall Street is looking for $1.27 billion in sales and a net loss of 38 cents per share. Shortly after the last earnings report, GameStop completed a 4-for-1 stock split, fired its CFO, and launched an NFT marketplace. CEO Matt Furlong says that the company is still in the early stages of its transformation, which will require long-term investments in infrastructure and technology. GameStop remains popular amongst retail investors and short squeeze traders, as short interest is 50 million shares, or 20% of free float. Make sure to subscribe and check back every weekday for more interesting data highlights from ORTEX.